Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news financial markets are eyeing some American confusion. First up today, and surprising few market observers, the US Fed has trimmed its benchmark policy rate by 25 basis points to 2%. They said that although household spending has been rising at a strong pace, business fixed investment and exports have weakened, and both inflation and wage growth seem stuck below their targets. It was quite a split decision, with 2 votes to make no change, 7 for a 25 basis point cut, and 1 vote to cut by 50 basis points. Signals for the next move were quite mixed. Market reactions are modest, mainly because it was the expected decision. The bond markets bid down yields in the hours before the release and have stayed there since. Equity markets were lower before and dipped lower after, and currency markets had a little flurry at the time, and the US dollar has firmed a little. Financial markets are still being buffeted by pressures that test the Fed's upper bound, and the New York Fed has had to buy another $75 billion of securities to hold it within the policy range. In 2 days, that is an unexpected $125 billion of emergency market activity. Meanwhile, US housing start data for August came in more than 6% higher than the same month a year ago, in an unexpected gain. Building permits rose even faster, up to twice the year-on-year rate. The Icon air freight company, FedEx, shares have plunged the most in a decade after the company's Global Express business showed its vulnerability to global trade disruptions. And in China, new data shows that their fiscal spending fell in August, the first fall in a long time, as central and local governments face funding strains amid a large-scale campaign to cut taxes and fees. But they're still planning to ramp up major infrastructure projects, especially major rail network expansions. In Australia, new data out today from SEEK shows that job ad levels are dropping fast and substantially, down more than 8% year-on-year to August. The US Treasury yield is lower, down 3 basis points, now at 1.78%. Gold is a little lower today as well, down $5 to $1,497 an ounce. US oil prices gave up another $1 after the weekend rise to now be just on $58 a barrel. The Brent benchmark is now just on $63.50 a barrel. The latest American inventory levels of crude stocks show them rising and well above expected levels. The Kiwi dollar is softer on a rising greenback, now at 63.2 US cents. On the cross rates, we're softer too at 92.5 Aussie cents, and against the euro, we're down to 57.2 euro cents. That puts the TWI down to 68.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.